What is a liquid asset? A liquid asset is an asset that can easily be converted into cash in a short amount of time. Liquid assets include things like cash, money market instruments, and marketable securities. Both individuals and businesses can be concerned with tracking liquid assets as a portion of their net worth. For the purposes of financial accounting, a company's liquid assets are reported on its balance sheet as current assets. A liquid asset is cash on hand or an asset that can be easily converted to cash. In terms of liquidity, cash is supreme since cash as a legal tender is the ultimate goal. Asset can then be converted to cash in a short time are similar to cash itself because the asset holder can quickly and easily get cash in a transaction exchange. Liquid assets are often viewed as cash and likewise may be called cash equivalent because the owner is confident the asset can easily be exchanged for cash at any time. Generally, several factors must exist for a liquid asset to be considered liquid. It must be in an established liquid market with a large number of readily available buyers. Ownership transfer must also be secure and easily facilitated. In some cases, the amount of time to cash conversion will vary. The most liquid assets are cash and securities that can immediately be transacted for cash. Companies can also look to assets with a cash conversion expectation of 1 year or less as liquid. Collectively, these assets are known as company's current assets. This broadens the scope of liquid assets to include account receivable and inventory. All liquid assets are current assets. By their nature, the benefits of long-term assets are not generally recognized within the next 12 months. Balance sheet accounting. In financial accounting, the balance sheet breaks assets down by current and long-term with a hierarchical method in accordance to the liquidity. A company current assets are assets a company looks to for cash conversion within a 1 year period. Current assets have different liquidity conversion time frame depending on the type of asset. Cash on hand is considered the most liquid type of liquid asset since it is cash itself. Cash is a legal tender that an individual or company can use to make payment on liability obligation. Cash equivalent are marketable securities follow cash as investment that can be transacted for cash within a very short period, often immediately in the open market. Other current assets can also include account receivable and inventory. On the balance sheet, assets become less liquid by their hierarchy. As such, the long-term asset portion of the balance sheet includes non-liquid assets. These assets are expected for cash conversion in 1 year or more. Land, real estate investment, equipment, and machinery are considered type of non-liquid assets because they take time to convert to cash. Costs can be incurred to convert them to cash, and they may not convert to cash at all. Examples of liquid assets. Examples of liquid assets held by both individuals and businesses include cash and cash equivalent. Cash is the most liquid asset possible as it is already in the form of money. This includes physical cash, saving account balances, and checking account balances. It also includes cash from foreign countries through some foreign currency may be difficult to convert to a more local currency. Cash equivalent are other asset holdings that may be treated similar as cash due to their low risk and short-term duration. Examples of cash equivalent include treasury bills, treasury notes, commercial paper, certificate of deposit, or money market funds. Note that some items may have less liquidity based on term of the vehicle. For example, some CD cannot be broken or require a substantial penalty for early termination. Marketable securities. Some marketable securities are considered liquid based on the underlying asset. Example may include stock, bonds, preferred share of stock, index fund, or ETF. Other instruments may include futures or options. A critical part in understanding the liquidity of marketable securities is their holding duration. Liquid assets must be convertible to cash quickly, depending on the nature of the security. This isn't always possible. Also, be mindful that certain investments must be reported on the balance sheet as long-term assets and are not technically considered current assets. Thank you.